And Dan, you have some nice thoughts here about how you think energy is still a good spot to own, but not necessarily a great one to chase right now. What do you mean by that?
Yeah, hi, Kelly. When we look at what's happened, you've got probably $5 or $10 a barrel in crude around this potential for Russia-Ukraine disruption, and the stocks have had a great run here after a month or two or three or four of being the best in the market, and so feels like we're a little bit full. We need something to happen from a physical supply disruption in Russia. And, betting on disruption has been a tough game for the past decade in the oil markets, whether it's Middle East violence or whatnot. And so to me, it feels like, sure, we could go to $100 a barrel, but we could also go to 80. So the risk rewards kind of come back in here over the last, call it 2 weeks.
How quickly could we go back to 80?
Well, if peace broke out, and I think you could see that in the span of 2 or 3 or 4 days. And so it would be pretty violent, just like we've had a big move up. Peace breaks out, you probably have a market rally, you get some rotation out of the value plays into growth plays. And so, I think it could happen quickly.
Could $80 oil still be supportive for a lot of these stocks to do well?
80 is a fabulous number for energy stocks. And we think during the course of 22, we're going to re-rate this whole group. It was the best group last year. I think it'll be the best group this year. Doesn't make it the best trade over the next month, let's say. And so I think we fall to 80 and stabilize there. These stocks take off, but I think they follow the commodity in the near term.
Nat gas is even harder than crude. What would you say for people looking at opportunities in that space? And maybe they're taking the long-term view and saying they like the prospect of the U.S. being a bigger exporter.
I think that's the right long-term call for sure. Gas is sort of cementing its place as the bridge fuel between hydrocarbons and renewables. And so I think global gas is going to be a sort of a big industry for the next 15 or 20 years. U.S. gas is going to be a contributor to that. And so from a long-term perspective, the names in the gas industry, I think, have a lot of tailwinds behind them. You've had a run in price there as well. And so we won't be immune to any sort of commodity pullback in the near term, but they're a good place to be.
Tell me some of your favorite stocks in the energy space right now.
Yeah, so with the caveat, of course, that it feels like we're a little heavy right now. I still love the Permian oil producers. We've talked about them before, the Devons and Diamondback Energies of the world. I like on the gas side, EQT, biggest gas producer in the U.S. Schlumberger is a name that's been talked about frequently on the program today. Schlumberger, to me, is a nice way to play the global rebound in oil activity over the next couple of years.
And, I mean, it's hard to know because yesterday is different from today with the Russia-Ukraine situation. But how do you expect this to reshape the energy markets for the next possibly decade here? I mean, are these things where we could see, for example, much bigger secular demand for a U.S. LNG? I don't know about what the impact could be in the oil market in particular here. How are you thinking through this?
Yeah, I think that we've had a wake-up call over the last 6 months that we're not weaning ourselves off of fossil fuels anytime soon. This Russia situation is a reminder of how sort of fragile the whole hydrocarbon ecosystem is, whether it's Iran as a big supplier, Russia as a big supplier. The U.S. probably takes even more significance. We're, a very big producer on a global basis of both oil and gas. And so U.S. hydrocarbons ought to carry a premium valuation at a minimum because it's unlikely we're going to have these kinds of disruption situations happening here in the U.S.
What would happen if we didn't have Russian energy to rely on, either on the oil or nat gas side?
Prices would be higher. I think the market would find a way in the intermediate term to work around that. There's plenty of global gas. We just got to get it produced and moved around to the right spots. OPEC would step up with incremental barrels. The U.S. would see higher spending and higher production activity if Russia were to be shut out of the markets. I think importantly, though, it's going to be real tough to wean ourselves off of those hydrocarbon supplies in the near term. And with, things like a U.S. midterm election coming up, are we really going to turn off Russian oil and have $5 gasoline in the U.S.? That feels like a stretch to me. It's one of the reasons I'm a little nervous right now.
And you mean nervous in a bearish way? Yeah, most people are nervous to the upside.
Nervous that $93 crude goes to $82 crude.
Exactly. Maybe good news for the rest of us. Dan, thank you so much for joining us today. Good to see you.
Shepard Smith here. Thanks for watching CNBC on YouTube.